Hi, everybody. This is Colin Murphy from Torcana, and welcome to show 2 of the Torcana Podcast. So, before the podcast gets started, I'd like to confirm that I'm providing general information only relating to the real estate market and it's just for educational purposes. You should always seek professional advice before taking any action, and actual returns on rental properties will always vary from person to person and deal to deal based on unique circumstances. Okay, let's get on with the show. Now, today I'm going to talk about our simple guide to purchasing a USA rental property. And by that I mean what exactly you need to do to buy a property, what is the nitty gritty that you need to be aware of, the stuff that realtors generally don't like talking about. Okay, so a lot of important information in here, which includes the purchase process for purchasing a typical single family home, like what is the steps A, B, C, D between looking at it, reserving it, and actually becoming an owner. How title companies can protect your investment. A lot of people may consider title companies to be a nuisance. They're always sending you instructions, paperwork, things to sign, bank accounts to send money to. I'm going to talk a little bit about why they're actually very important and how they can protect you. Going to talk to you a little bit about how to work out your closing costs. This is an area where you can spend more money than you need to. There's some things you need to look out for, some ways you can save money. So that's important. After closing, clearly there's things you need to do after you close. The most typical big ticket items you need to look at after you close is to get your property insured, to get your property under management and find a tenant, and make sure you're dealing properly with utilities. So some people take a back seat after they've bought the property and sit back and wait for other people to do the work. I'm going to tell you what you need to be on top of. I'm also going to talk briefly about what your tax obligations are, and I'm going to try and do it in plain English. Obviously, tax is something most people don't like talking about. They consider it to be a very complicated, boring, tedious subject that's best put off for another day. I'm going to just tell you very, very simply what your tax obligations are as a property landlord. I'm going to speak very briefly towards the end of the podcast about how Torcana can help you purchase rental properties if you're interested, and what the next steps would be to get in touch with us. But first of all, let's start with the important stuff, the purchase process for a single family home. So once you see the adverts, you speak to a realtor or a seller, you look at the details, you visit the house, you do all that stuff, you pick it, you decide you want to buy it, negotiate the price. I'm not talking about any of that stuff. I'm talking about what you do after a property has been selected. And the first thing is that's done by either the seller or the buyer or a realtor or a broker, is that a purchase agreement is drawn up. Most of the purchase agreements I use to buy houses in Florida are standard FAR Florida templates, which is like a 12-page contract. That's a standardized use. Certain sections you need to fill in, certain boxes you need to tick, but it's very useful. I use the same contract for everything, so I don't need to analyze every single thing very closely. I can quickly scan through a contract now and see exactly what clauses are important and which ones aren't. Good thing about them is that nowadays, you don't have to waste loads of time printing stuff out and signing it and posting it and faxing it and all those things that used to be driving people crazy. Most of them can be signed electronically. You can just digitally sign it, or you can print it and scan it and email it. When you are looking at a contract, some of the most important things to note would be the closing date, and that's the date where you need to pay all of the money, the full purchase price. So note your closing date. Make sure you have money ready before that date. Note your inspection date, which is the date that your deposit becomes hard or non-refundable. So you often get, might be 2-day inspection, might be 5 days, might be 10 days, might be 20 days. But just make sure you know what that date is, because that's the date where your deposit becomes non-refundable. So any extra due diligence you need to do once it's under contract, make sure it gets done before that inspection date. Obviously look at your deposit amount. That could range from anything between $500 to $5,000 for a normal single family home. And then, just look at any added clauses. There's some clauses in there where the seller might choose the title company and pay all the title charges, or the buyer might choose the title company and pay all the charges, or there might be certain clauses in there where, the buyer agrees to pay in stages. I mean, just read through it carefully and familiarize yourself with it. Don't just rely on other people to do it for you, okay? Once you've returned that contract, signed it and returned it, you need to send a deposit to your title agent or the seller's title agent. A big no-no in any state in the USA is never ever pay a deposit directly to a seller. Always do it to a title company or to an attorney. Certain states like North Carolina, for example, they use closing attorneys rather than title agents. That's absolutely fine. Just make sure your money is going through a licensed intermediary. Okay, very, very important. As I mentioned, your inspection period is important. You might have 7 days after you've paid that deposit or after you've signed the contract to do any additional work, which might include getting into the property if it's tenanted. You can understand some sellers don't like letting people into tenanted properties until they're under contract. That varies a lot, but either way, you can use that to order an independent inspection by a professional. And I don't mean you walking around and seeing what the property looks like. That's important. But I would advise you to get a professional up there to tell you, how many years are left on the roof before it needs to be replaced. What's the electrical panel like? Does that need to be replaced? What's the plumbing system like? Are there any structural deficiencies or any evidence of sinkholes, any evidence of termites? There's loads of stuff that a layman would not notice that a professional will notice during a 45-minute inspection that'll cost you $50 or $60, and clearly it's well worth it. Lots of times I've put properties under contract, I've had them inspected, and I've pulled out because I've noticed stuff that I didn't notice the first time round. Might have been a roof that I thought looked good but needed to be replaced in a year. So that's an extra $6,000, that I didn't know I had to spend. Or it might be an electrical panel, had a bunch of aluminum in it that needed to be taken out and replaced. I mean, there could be anything that you mightn't notice, so just make sure you get it inspected. Once you've gone past your inspection period, you're just waiting for your closing date. I mean, for the properties, I generally close in 2 weeks. I'll buy it on the 1st of the month and close on the 14th. Other times is 30 days. I bought one yesterday, which was the 2nd of February. I'm closing on the 10th of March because there's owner occupiers in there and they needed a bit of time to leave and find somewhere else to live. So obviously that's fine, but just be aware of your closing date. When you do approach your closing date, you get some additional documents to sign and return. You would need to return those by post, and you can also return them by email as well, but you'd need to do both. Just note carefully any waivers. I mean, for example, you might be ticking a box that says any utility bills that appear after I close are going to be paid by me. I mean, stuff like that. So you just make sure you're aware of them. I'm happy with stuff like that, but other times there can be nasty surprises, so just make sure you're not signing off too many waivers, okay? An important piece of paper, I mean, there's loads of papers, there's 40 or 50 pages, but the most important one is your settlement statement. And the good news is that they're very easy to read. They're literally a 2-page spreadsheet looking document called a HUD, or a settlement statement, and that pretty much shows you who's paying what during the closing process. I'll show you an example of one in a moment for those that are watching it on video. And obviously just pay the balance of your purchase price, pay your closing costs, and then the property is yours. Okay, that's the purchase process for a single family home. So title companies, what do? These are independent licensed firms who ensure that the title is passed from the seller to the buyer. Okay, they pass ownership from property from the seller to the buyer. They hold the money from the buyer and only give it. They hold the money from the buyer and only give it to the seller after they're satisfied that they can pass clean title to you. Okay, so what they would do. Let's say you reserve a property and you pay the title company a deposit. The first thing they're going to do is start searching the title of that property to see if there's any issues with it, to see if there are any second mortgages on it, to see if there's any tax liens, see if there's any unpaid utility bills, because that stuff's important. There's some bills that stay with the house, they don't stay with the owner. You could buy a house carelessly and be stuck with somebody's second mortgage. You could be stuck with a tax bill for $10,000. You could be stuck with a HOA bill or a utility bill. So title companies look for all of this stuff for you, and it's very important that they do it, and they all do it well, because if they don't, if they miss something, if they missed the $5,000 bill and then they transferred the title to you and then it came up afterwards that they hadn't done it properly, the title insurance that they've given you will protect you. They'll have to pay that $5,000. It won't be you. Okay, so that's what they do. They search very carefully because they're literally giving you insurance in case anything crops up with that property, any unpaid liens that crop up with the property. They're not insuring you against every single thing that can go wrong. No, it's very specific criteria. Okay, and you should talk to your title agent to understand what that is. Don't talk to me about it. Talk to a title agent. So they hold all the funds in escrow. That's obviously important, and they disperse the funds to the seller when they're happy that everything is in place for them to pass clean title over to you and give you the title insurance. So they'll register all the documents with the local authorities to show that you're going to be the new owner of record. They do all of that for you. And so briefly moving on to closing costs again, let's say you buy a property for $100,000. What are your closing costs going to be? Typically, they're going to be between 1 and 1.5%. Okay, so $1,500, and it varies a little bit. Sometimes you're stuck paying a lot of the title costs. Sometimes you're sharing them with the seller. I mean, you need to read the small print carefully, but generally 1 to 1.5% would be a good ballpark, certainly for the properties I sell to investors. Okay, that 1.5% is made up of closing fees, search fees, title insurance fees, and transfer taxes. I'll show you those. I'll talk about those in a minute in an example. But as I always read the HUD statements, they contain the breakdown of the closing fees. And those of you who are watching in the video can see a sample HUD statement from a property I bought for $57,000 a few weeks ago. There was the closing fees were $1,459. That's actually higher than average. The reason was that I bought it from Fannie Mae, and being a government entity, they're exempt from paying certain fees and certain taxes, which meant they fell on me to pay them. So if I was buying that from a private person, they may have been $1,000 or $800 instead of $1,460. But for this property, it's $1,460, and that was broken down by $525 to the title company. That was literally for the man hours they put into doing everything. I had to pay them $525. The title insurance for the owner was $327. So that's the insurance I'm paying. It's a one-off cost to insure myself against any title defects. If anything crops up, if they haven't done their job properly and some title issues crop up, that insurance policy will pay me. That'll pay out on it. Okay. Their title searches, which means searching the public records to see what's going on, to see what the history of that property is. They charged me $60. Transfer taxes were $403. That is basically a tax to the local government for basically a tax you pay them when a property changes ownership. It's just that's what it is, sales tax. Municipal lien search, that was searching to see what unpaid utility bills. That was another $120. $20 for document storage. That's a bit of a Mickey Mouse expense, to be honest. I don't think they had any costs for storing documents, but anyway, they charged me $20 for it. And that was it. That added up to $1,459. So it's made up of their fees for doing the work. That was $525. Title insurance $327. Transfer taxes to local government $400, and then there's some title search fees, which were another $180. Okay, hope that helps. So there you go. You've bought your property. You've closed it. You're the new owner. What do you do after closing? One thing. This is your money. Whatever you do, we sell properties to a lot of busy people, busy doctors, busy entrepreneurs, leading busy lives. They spent a lot of several weeks or possibly months researching the property, picking it, doing all the paperwork, sending the money to escrow, and now they're the owner. And it's very tempting to take a break. Just, okay, I've done it now, I'm taking a step back. No, don't. This is your money. Don't take a break after you bought the property. You're not finished. It's not up and running and producing cash flow just yet. And the first thing you need to do is get yourself adequate insurance and liability coverage. To be honest, you need to be lining up your insurance before you close so that you're insured from the day you close. So if you're closing on the 15th of February, you should be getting some quotes a week beforehand and picking one of them and getting it bound on the 15th. You need coverage for when the property is vacant, and you need coverage for when there's tenants in there. I mean, you don't want get proper coverage. I mean, a tenant could sue you for falling down the stairs. They could sue you for $200,000 for a house you paid $90,000 for. They could successfully sue you for $200,000. So you need a liability policy. You need insurance for fire, theft, vandalism, pipes bursting. You can get insurance for floods. You can get insurance for hurricanes. It's very, very important. Insurance is a pain in the ass. I spend a lot of time dealing with it. I'd rather not deal with it, but I have to, because it's very important. I could spend years building up a nice property portfolio, and it could be wiped out by a single fire or a single disgruntled tenant suing me. So you need to be insured to protect yourself. I mean, the typical insurance policy for $100,000 single family home, the ones that we get anyway, is about $1,000 a year. That's what you're looking at for decent coverage. I mean, you can get lower deductibles, higher deductibles. You can get flood insurance, not flood insurance. You can add to it or detract to it. But a standard policy in a $100,000 home in Tampa, Florida, where I'm active, it's about $1,000 a year. Okay. Second thing you need to look into is a property manager. I mean, property manager is pretty much the most, and this is just assuming you don't want to manage it yourself, which most of us don't. I mean, unless you live close by and you have spare time and you know what you're doing, you're going to find a property manager. They'll generally charge you, 8%, 9% of your gross rental income plus extra fees for placing tenants. And what do they do? Some of them are bad and don't do very much, but a good property manager, they're responsible for liaising they're responsible for advertising the property, showing tenants the property, performing background checks on the tenants to make sure they don't have a criminal record, to verify their income, to look at their rental track record, to make sure they've no evictions on their record, basically screening them properly, okay? Drawing up the leases, getting them to sign it, collecting the deposits, making sure they get the utilities transferred over to their names. That's just to get them in there. Once they've done that, they're the people that liaise with the tenant. They ensure they pay on time. They organize any repairs that are necessary with your permission. They communicate with you on a regular basis. The best ones have fancy software like AppFolio, which means you can log in at any time and see what's going on with your property in terms of income and expenses. And they provide you with the statements you need to file your tax returns. So yeah, they're important. I mean, I could write, and I probably will, do an entire podcast just on property management. I mean, a property manager can turn a pretty average property into a terrific investment, and they can also turn a terrific investment into a crap one that loses you money all the time. So they're very important. A quick note on utilities. I mean, ringing water and electricity companies is not much fun. They keep you on hold for ages. They faff about. They're bureaucrats. But anyway, if you're getting a property manager, basically get them to turn on the utilities. The good ones will deal with it for you. They'll put the utilities in their own names, and then they'll transfer it to the tenants' names, and you get billed just for whatever portion was yours before the tenants moved in. But just make sure it's done. I mean, for me, for example, when I buy a property that needs renovations, I mean, it's going to be under construction for 4 or 5 weeks, but obviously the workers need electricity and they need water, so I need to turn on utilities straight away. I mean, if you're buying a rent-ready property, it's not that much of an issue. Just make sure that they get transferred from the previous owners. Make sure you're not getting stuck with bills from other people. I mean, utilities can get a bit messy if you're not on top of them, so just make sure that your property manager is on top of them. Okay, so now getting on to taxes, not much fun, but it's not as complicated as people think. Don't be scared about taxes. Just figure out what you have to do and do it. I mean, the first year you do it, first time you buy a property, the first time you have to file taxes, especially if you're a non-US resident. Yeah, it's a bit awkward, but just figure out what you have to do, and lots of people can help you, point you in the right direction. But I mean, breaking it down, you have to pay income taxes on the rent you earn. You have to pay property taxes, which is just a tax on every building in the United States. And if you sell the property for a profit, you have to pay capital gains tax. So there you go. Income tax, property taxes, capital gains tax. Okay, so I mean, just to clarify, Every owner of a USA property, doesn't matter where you live, doesn't matter if you live in England, doesn't matter if you live in the Bahamas, the Caribbean, wherever, it doesn't matter where you live. If you own a USA property, whether it's empty or whether it's got a tenant in there paying you thousands of dollars, you have to submit tax returns detailing your income and expenditure. Even if you've no income, you still need to file a tax return. Okay? Good news about filing tax returns on rental income is that there are loads and loads of deductions available. Literally the length of your arm. The best one is depreciation. You can depreciate a property over 27 years. So even though the price is probably going up, you can still deduct depreciation. You can also deduct advertising, cleaning, maintenance, insurance, tax return preparation fees, mortgage interest, repairs, supplies, property taxes, utilities, depreciation, basically any expense that's ordinary and necessary in the running of a property. You can also include the costs of you visiting the property, whether you're flying in from out of state or driving down a few hundred miles. Just make sure you talk about it with your accountant. But there are a lot of stuff, and you might earn $10,000 in net income, but you might actually end up paying tax on $4,000 or $5,000 because you've had all these great deductions. Okay, so income tax isn't actually a big deal, but you just need to work it out. Property taxes, again, that's just something that's taxed on every building. The typical property tax for the kind of $90,000 to $100,000 single family homes I buy in Tampa, usually $900 to $1,100 a year. You have to pay them in between October and March, basically. So the easiest way to do all this, the easiest way to deal with your income taxes certainly is to get a US accountant to file them for you. I mean, I deal with one that's been filing my returns for years. We pay her, I think, about $400 a year to file our tax returns. It's definitely worth it. Your property taxes, you can pay them online yourself. It's per county, so it could be Pasco County, Pinellas County, Hillsborough County, whatever. All of the counties I've seen and paid taxes on, they all have good websites nowadays. It's 2016. These people have pretty good websites. They make it easy for you to pay your taxes, easy for you to stick in your email address so that you get reminders when your taxes are due. Just something that just do it at the beginning. Do a Google search, put in your county name and then tax collector. So it could be Pasco County tax collector, and then just click on pay taxes, register, put in your email address, your name. You can pay online with your credit card. Like for example, for 2015 taxes, your tax amount was available in October 2015, and you had 6 months to pay it. And the earlier you paid it, the cheaper it would be. So they might have in October, they might say your taxes are $900. In December, if you pay it in December, it would be $950. If you pay it in March, it might be $1,000. So the earlier you pay it, the cheaper it is. But you have 6 months to pay it. But whatever you do, pay those property taxes. You could literally lose a property worth $100,000 for not paying $2,000 worth of taxes. I've seen it happen. I've seen it happen to people that have bought substantial properties, sophisticated people that just ignored all their tax reminders or forgot about them. And what will happen if you don't pay your taxes for a couple of years? They'll take it off you and they'll sell it at an auction. They'll sell it to some other guy for half what you paid for it, and it's gone. You've lost it. So just deal with that. Pay your property taxes. You can get email reminders. It's no big deal. Capital gains tax. I mean, if you're flipping it, if you're buying it in January and selling it in June, I mean, you're paying taxes really at income tax rates, which are 10 to 35 or 40% depending on where you are. But generally, if you hold the property for a year and then sell it, your capital gains should be between 15 and 20%. I mean, clearly, disclaimer, I'm not a licensed US accountant, tax accountant. So, all of this tax information you need to confirm with a qualified professional. You need to deal with qualified professionals on all matters related to taxes. I'm just giving you some guidelines from my experience paying taxes on my rental properties, okay? But make sure you're dealing with professionals. So, hope that was useful. As we talked about purchasing a property, closing costs, taxes. I mean, if you are interested in purchasing a rental property, I mean, we deal with rental properties. We specialize in selling them and buying them and renovating them in Tampa, Florida. We've been helping people to build rental portfolios since January 2009, so for more than 7 years now. We've got very good relations with property managers, insurance agents, property inspectors, contractors, title agents, and accountants, all the people you need on your inverted commas team to help you maintain a cash flow positive property over a long period of time. You need those people. You need your manager, you need your insurance agent, you need an inspector, you need a title agent, you need a good accountant. Okay, we always place very strong emphasis on after sales. I know how difficult it is to buy a property from out of town or out of state or even overseas. I've done it. I've helped people do it for a lot of years. We know what they need. We help people with their insurance, with their currency transfer, with a whole range of things, and because we do that, we enjoy high levels of repeat business. I mean, I'm not we don't spend tens of thousands of dollars advertising for new buyers every month and then just selling to them once, messing them around, ignoring all their requests for help. No, we answer requests for help. We deal with things long after we sell a property because it enables us to keep our marketing budget low. It enables us to enjoy a high level of repeat business and thankfully, touch wood, lots of client referrals. So, we specialize in buying, renovating and reselling quality single family homes in Tampa, Florida. Generally, lower middle class areas, $80,000-$90,000 would be our typical sales price, and they would have expected net rental returns of 8.5% to 9.5%. So that would be after your management fees, your insurance, your property taxes. We'd include a vacancy reserve and a maintenance reserve. So you can reasonably expect a 9% cap rate with the kinds of homes that we're selling, and you can find out a lot more about them on our website. The property market in the USA and Florida in particular has been recovering for 4 years, almost 5 years. I mean, prices stopped falling in late 2010, early 2011, so it is a competitive market. A lot of new people are entering into it every month. If you want to find out more about it, you can email me at colin.murphy@torcana.com. That's colin.murphy@torcana.com. You can call me on my American number is 321-806-1195. If you're based in Britain, you can get me on +44 207 193 4024. In Ireland, +353 144 34 466, and on Skype on Torcana-Colin. Okay. All of that information is available on our website, torcana.com. I'd also encourage you to have a look at our blog, which I try and add to regularly. That's info.torcana.com. And that's pretty much it from me. I hope you've enjoyed this short podcast. Would really appreciate any feedback, and we'll try and get back to you with more information real soon. Thank you very much. This recording contains general information relating to the real estate market, and it is for educational purposes only. Buyers should always seek appropriate legal, tax, and financial advice from suitably qualified professionals before entering into any real estate transaction. Actual returns from rental properties will always vary from person to person and deal to deal based on unique circumstances. While we have no reason to doubt the validity of comments of any guests on our show, we do not warrant their accuracy. Opinions of the host are not necessarily shared by other employees and partners of Torcana and its subsidiaries.